Hi, I'm Luke Alexander, President and CEO of Newcore Gold, with a update on the company. First thing I'd like to highlight is that I will be making some forward-looking statements, so I'd encourage you to go to our website and have a look at this disclaimer. While you're there, I'd also encourage you to sign up for the various social media platforms that we're on. We put out a lot of very good content that a number of our existing and prospective investors really find useful. Newcore Gold does trade on the TSX under the ticker NCAU and trades on the OTCQX under the ticker NCAUF. So I'd encourage you to also look us up on both of those trading platforms. Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics for a simple open pit heap leach project. We are currently in the process of updating those economics to include a larger overall resource that we put out in March of 2023. We're expecting that updated PEA to be out in the first half of this year, so in the next couple of months. And we think that will further underpin the value of Newcore Gold, as well as the upside potential that there is as we move the project towards a ultimate construction decision. Right now is a very interesting time to be looking at the gold sector, and specifically Newcore Gold. We've got gold trading around $2,300. We have rebounded off of our all-time lows, but today we're still trading at about $11 or $12 per ounce in the ground. That's less than it costs to discover ounces at our Enchi project in Ghana. And we're trading at less than 0.1 times the NPV of the project at an $1,850 gold price. So again, that's a much lower gold price than we're seeing today. So there is a big opportunity, in my view, for investors to be revisiting Newcore Gold as we see the gold price hitting all-time highs. In terms of the company itself, you've got a management team and board who are very well aligned with existing shareholders. So we own 20% of the stock. This is stock that we bought alongside investors over the last number of years, so we're truly aligned from that perspective. As I mentioned, we've got a PEA that we've put out on the project that we're currently updating at the moment that I think will be a big catalyst for the company. And our project is located, again, in Ghana, which is a Tier 1 jurisdiction, and I'll talk to you a little bit of detail about why we see Ghana as a Tier 1 jurisdiction. ESG is something that's a core focus for us at Newcore. Our view is that all stakeholders need to benefit in a project to ultimately push it forward. And as a result, we look to adhere to as many of the UN Sustainable Development Goals that are appropriate for a company at our stage. In terms of the management team and board, my background, I spent the first 20 years of my career on the investment banking side of the business, 12 years in London, covering all the big global natural resource funds out of the UK and Europe, advising different mining companies listed on the ASX, TSX, and London listed markets. Our head of exploration, Greg Smith, over 35 years of experience exploring these greenstone hosted deposits. Malkar Vaska has a strong private equity and banking background. And then crucially, the bulk of our team is in Ghana, led by Dan Wilson, our country manager. A number of these companies, are very successful mining companies, and I would encourage you to look any of those up. In terms of capital structure, we've got a very good capital structure, about 173 million shares outstanding. As I mentioned, we're trading at about $11 or $12 per ounce in the ground today. That's less than it costs to discover ounces in Ghana, and less than 0.1 times the NPV of the project. So a very exciting time to be looking at Newcore from an investment perspective. We've got a good cash balance at the moment, so everything I'll be talking about, we're funded to complete that work. We've got about 4.9 million in the bank as of the end of September. And importantly, we're very well backed by deep-pocketed, long-term focused mining and precious metals investors. We currently sit at 45% institutional ownership. And for a company at our stage and our size, that's something that's very rare. But I think that really, again, speaks to the quality of the project that we've got, as well as obviously the team who has a proven track record of ultimately moving projects forward. Ghana, it's a tier 1 jurisdiction. It's Africa's largest gold producer. It's the 6th largest gold producer globally, just behind Canada and the US. As a result, it's very important for the economy. It's important for the tax base. And for us, one of the things we really get to leverage off of is the fact that there's a huge amount of skilled labor and mining service companies in country. But what we always say is don't listen to us. We're a single asset company and are obviously biased from that perspective. But look at what the major mining companies are doing. You've currently got 3 of the top 10 largest gold producers on the planet with significant operations in Ghana. You've got Newmont, the largest gold company, investing another $1 billion into their Ahafo project, which sits to the north of us along the Sefwi-Bibiani belt. That will take them in terms of their tier 1 managed portfolio to 23% of that overall production. So again, I think that speaks to itself in terms of what a great jurisdiction it is. Well, it is. We've also seen a lot of M&A activity in Ghana, which I think also speaks to the desire for major and mid-cap companies to be getting into the country. You've got Shandong, who bought Cardinal for roughly $90 per ounce in the ground. You've got Chifeng, who bought the Golden Star projects, which are currently producing in country, as well as you've got the merger, which has been announced between Gold Fields and Anglo for their Tarkwa and Idiapriem assets in Ghana. So lots of activity, as well as we've seen a lot of investment in country, including the Mineral Income and Investment Fund, which is Ghana's sovereign wealth fund in country. We're located in the southwest corner of Ghana. When we now zoom in on that, you can see there are 2 prolific gold belts that run through the country. You've got the Ashanti belt, as well as the Sefwi-Bibiani belt. Our Enchi project is on the Sefwi-Bibiani belt. Great neighbors along trend from us. To the north, we've got Chirano and Bibiani, which have historical endowments of 5.5 and 6.5 million ounces. And then here's that Newmont asset, Ahafo, where they're spending the additional $1 billion, sitting at 20 million ounces. So very large deposits in country, and we're obviously in a very favorable location with our Enchi project. In terms of infrastructure, sometimes people, ask, is this project in the middle of nowhere? Is it going to cost, hundreds of millions of dollars to develop? The answer is no. We've got great infrastructure. We've got a paved road that goes right through the middle of our project to the town of Enchi. There's a power line that runs along this road. Enchi's got about 15,000 people, so it's got all the support services we could want. It's got high schools, it's got hospitals, it's got a university campus, but importantly, it also sits about 15 kilometers away from our project, that we don't anticipate any issues when it comes time to developing the project. About 5 kilometers outside of town, this is where our core shack sits. We've actually doubled it in size, given all of the successful drilling that we've done on our project. And this really illustrates the infrastructure here. So again, we've got this paved road that you can drive 100 kilometers an hour along. You've got a power lines sitting here, half dozen gas stations throughout the project, cell phone tower. You then drive 15 minutes down this dirt gravel logging road. You're standing on top of our Boeing deposit. Another 15 minutes from there, you're on top of Sium. So very good access to our deposits. And this is one of the things that really contributes to the low capex that we see for the development of our Enchi project. In terms of the project itself, it's a very large land package, 248 square kilometers in size. We've identified 25 targets to date, of which we've only drilled on 9 of them. To the north, we've got the Chirano mine as well as the Bibiani mine, which again are 5 million ounce plus historical endowments. So we feel we've just scratched the surface in terms of the exploration work that we've done to date. In 2023, we did put out an updated resource update. This grew the overall size of the resource at our Enchi project, and these are the ounces that we're using to feed our updated PEA, which again will be out in the first half of this year, so the next couple of months. And we accomplished a few things with this resource update. Firstly, we moved 740,000 ounces into the indicated category. So these are ounces that have been further drilled out, that have been further delineated. We also added an additional 970,000 ounces in the inferred category. So we grew the overall size of the resource when you look at the 740 plus the 972. We also, for the first time ever, we put out some underground resource. So 136,000 ounces of underground resource, which speaks to the upside potential of underground mining in the future. And we also added a 5th resource area at Tokasea, which currently sits today at about 47,000 ounces. So again, this highlights the growth potential by being able to expand areas like Tokasea. All of our deposits remain open along strike and at depth, so we see the opportunity to continue to grow all of our existing deposits in the future. Grade is something we also always like to discuss. All of these numbers here that you see were driven by using a 1650 gold price. And grade is something that we talk about, 0.55 grams within the indicated category, 0.65 grams within the inferred category. So we're sitting at roughly 0.6 grams per ton on our project. And what we've outlined, again, is a very simple open pit heap leach project. And when you look at heap leach projects globally, you're typically looking at 0.3 to 0.4 grams per ton. So one of the things that really helps drive the economics for our project is the fact that we've got higher grade heap leachable material. That being said, if you tell me that gold's going back to $1,400 or $1,500, we do have a lot of flexibility within our resource. So currently we use a roughly 0.2 gram per ton cutoff. If you wanted to increase that to 0.5 grams per ton within the indicated and within the inferred categories, we'd still be sitting at roughly 500,000 ounces at just under a gram per ton within the indicated category, and an additional 580,000 ounces at just over a gram per ton within the inferred category. Add the underground resource to that, and we're sitting at roughly 1.2 million ounces at greater than 1 gram per ton. So lots of flexibility within our resource to ultimately target higher grades, but obviously that's something we'd never focus on when we've got very economic material all the way down to that 0.2 gram per ton cutoff. I did highlight that we put out the first ever underground resource on our project, and this is a good way to illustrate why that's important for Newcore and for our project. What we're looking at here is a long section of our Enchi project We then compare that to the Toronto mine, which sits again about 40 or 50 kilometers to the north of us. That sits at roughly 5.5 million ounces of, 5.5 million ounces of historical endowment. And when we superimpose the depth of the oxide transitional material and we compare that to, the Toronto mine, all of our resource that I highlighted to you sits within pits that have an average vertical depth of 80 meters. Currently at Toronto, they're mining down at roughly 800 meters below surface, 1.5 to 2 gram per ton of material. So we feel we've really just scratched the surface in terms of the exploration that we've done at 80 meters compared to 800 meters. We have started to drill a few deeper holes on our project down to kind of 250 to 350 meters in depth, and we've started to have some very good success. Of the 135,000 ounces that I mentioned, underground resource that I mentioned, about half of that comes from our NIAM deposit, and when we zoom in and now look at that in a little bit more detail, I think this really illustrates the upside potential that we've got. So what we're looking at here are the pits that constrain the primarily heap leachable oxide transitional material at our project. As we started to drill deeper, we hit 5.8 grams over 7 meters, 5.6 over 8 meters, 5.4 over 9 meters. So we feel we can start now talking about how we've hit one of these higher grade chutes that ultimately extends at depth. Again, when we look at it from a 3D model perspective, you can see the pits that constrain the open pit heap leachable material. When we take off some of the lower grade material, you can start to see these high grade chutes that ultimately sit on our project that we've started to identify. 500 meters to the south of this chute that I was just highlighting to you, again, we've started to have some very exciting results. 3.2 meters over 3.2 grams over 9 meters, 7.4 over 8, 3.5 over 9, 6 over 6. So again, we feel we've started to hit one of these high-grade feeder zones that will ultimately continue at depth. When we back up from this now and look at it from a distance, this model includes every single hole ever drilled here at NIAM. So it's pretty clear to see that there's big opportunities for us to drill to the north, the south, and in between the two high-grade feeder zones that we've identified to date, as well as continuing to chase these chutes to depth and hopefully prove up a similar model to what we see along trend from us, which is extension down to a kilometer plus below surface. So that's the upside from a underground perspective. It's important to remind you, though, that we do remain open along strike at all of our deposits. So systematically continuing to step out and grow the near surface material is something we'll also continue to focus on, as well as all of those additional targets that we've done early stage work on, such as soil sampling and trenching that will warrant drilling in the future. As I mentioned, in 2021, we did put out a PEA. We are updating this PEA with the larger overall resource that we've outlined, as well as a lot of de-risking work that we've done on the project. But what we saw in 2021 was a very simple open pit heap leach project. All of the numbers were run at a base case of $1,650 gold. We had an after-tax NPV of $212 million, after-tax IRR of 42%. And one of the things that really helps drive that is the fact that heap leach projects do have a much lower CapEx, as well as all of that infrastructure that we get to leverage off of. That was the base case of 1650. If we now look at it at an 1850 gold price, for instance, we're looking at an after-tax NPV of 302 million, after-tax IRR of 54%, and less than a 2-year payback. So these are very attractive metrics for the project, and we're excited to be able to update these numbers with the larger, more de-risked resource that we put out in 2023. Some of that de-risking work has involved the metallurgical test work that we've done since 2021. Overall, we've now completed over 390 met tests on our project. Specifically, from a column test perspective, we've completed over 20 column tests on the material at our Enchi project, and we've had very good results, over 91% recovery within those column tests. We've also completed 2 bulk scale pilot heap tests on our project. These were using 15-ton material from our Boyne deposit, as well as our Sium deposit. And as you can see here in this chart, if I zoom in a little bit, after 60 days of leaching, we had almost 92% average recoveries from those bulk heap leach tests. So that further supports the 20+ column tests that also had 91% recovery. So this project is very amenable to heap leach, and that's something that we're excited to incorporate into the updated PEA that we'll have out in the next couple of months here. So in terms of key takeaways for Newcore, you've got a management team and board who are truly aligned with shareholders through our 20% ownership in the business. This is money that we've invested alongside shareholders. We've got a good, strong capital structure and very well backed by deep-pocketed, long-term focused institutional funds at 45% ownership today. Ghana's a tier 1 jurisdiction. Our project sits on the CEF we built, which has numerous 5 million ounce plus deposits on it. As I highlighted, very robust economics from our 2021 PEA, and that's something that we're very excited to be updating, and I see as a real catalyst for the company, as well as district scale exploration upside. We've identified 25+ targets to date. We've just grown the overall size of our land package with the additional Omampe license, which we've added. So that ability to target new areas as well as focus on drilling at depth is the district scale exploration project upside that we're obviously excited about at Newcore. Again, we're always keen to engage with existing and prospective investors, so please reach out if you'd like to learn more. And as I mentioned at the start, follow us on the various social media platforms.